Good afternoon, everyone. Gabe Velazquez here with you on a Tuesday. Today is the second day of May. Hopefully, we can get through the whole the whole program today. Keep freezing up. Did some changes here, so hopefully we can get through that today. If I freeze up, you know why. So this is Tuesday, the second day of May. Welcome everybody. We have a couple things. I have a class coming up tomorrow about odds enhancers. Obviously, in this environment, very, very important. Been very choppy across a lot of markets. We finally got some volatility today as the bank crisis kind of bubbles up again. We had the JOLTS number. All the volatility has been in the bond market, as you guys know. I mean, the bond market has just been a basket case, man. Up one day, down the next. Yesterday, we were down like 2 points on the 30-year, back up again. So very, very volatile bond market with the Fed coming in tomorrow. We also have Apple earnings. As you know, AMD just reported they're getting hit. AMD Advanced Micro on the semis. They're getting hit tonight. Let's get into it, everybody. So I do have a class. If you guys want to sign up for that, you can hit the link below. That's going to be 4 Pacific. Again, talking about odds enhancers. Going to go through a bunch of charts. Going to spend about an hour on charts. So it is a free class. So go ahead and register if you're interested in that. Also have the newsletter. Been talking about the VIX on the newsletter. Been talking about some things. So if you are interested, go ahead and link that. I also offer 5 free days of our morning sessions, which I go through the charts, talk about various markets, get into options and all that kind of good stuff. So anyways, so where are we at? Really, let's start with the S&P. Boy, it's just been, again, it looked like it was going to break out to the upside. As I wrote over the weekend with the VIX at 1615. I actually tweeted about that. The last time we were there was November of 2021, right as the Fed started hiking. We actually did get a sell-off initially. We got a rally into December. We got the VIX back down to 15, and then all heck broke loose, as you guys know, in 2022. So we are in similar situations. Obviously, circumstances are different now. Are they at the end of their hiking cycle? I don't think so. They're going to raise a quarter tomorrow. But the market is setting up for another big drop, I believe. I could be totally wrong, but just looking at the charts, looking where the VIX is and so forth, we had maybe today was the first kind of shot across the bow. Again, we didn't get any follow through. We actually had a level 4105, 4100, 4200 is still more or less the trading range. Haven't really changed a whole lot there. We attempted a bounce off of 4105. Actually, I had a level 4105, and it came up about 2 ticks shy of that, and then got a little bit of a bounce. And we're kind of just back in no man's land at the moment. With the lows from last Wednesday at around 4070. We'll see tomorrow. Clearly going to be an impactful day. Clearly, we'll see if we can break out either to the upside or the downside. The mega caps also obviously have been the main driver. Wrote about it. Everybody knows it's about 6 stocks that actually. Hey, how you doing, JT? Nice to see you. The Nasdaq. The 5 horsemen, if you want to call them. You guys know the mega cap tech are essentially still the main main stocks driving the indexes. We saw that clearly last week with the Meta and Microsoft basically reversing the trend or whatever after a false break. At the end of the day on the charts, literally for the last month now, what is it now, right? Going on a month, we're still in a trading range, 4,200. 41, we could expand that down to maybe 4070, but roughly for all intents and purposes, 4100, 4200 on the S&P. Nothing really changing much. Again, perhaps with the VIX at 16, maybe we actually come down a lot harder. We again today was again more of the same. That drop this morning came from more bank concerns and the hot or the JOLTS number, which came in very, very hot. Yep. Yeah. Yeah, yeah, I had 40. JT, I had 4105, 4096 on the charts. If you want to pull that up, that was the level I had, and then there's another level 4085 below that. So we had a little bit of a bounce. We had about maybe 3x at the highs. Not a big deal. Tomorrow's going to be the big one. We've left some levels now. 4180, 4176 now with this big drop today. We'll see if we get some follow through there. So that pretty much sums it up. Yep. NQ also been, in fact, NQ was almost resisting the selling early. Even as the even as the S&P was falling, as you guys, if you're watching that. However, it finally gave way, but still rallied. We're actually still long SQQQ puts, by the way. So hopefully we get something going on those. We had a profit down at the lows on Friday. Jeff, great question. There's a gap on the charts on Tesla at 145. Right? Pull up your chart. That's what I'm targeting right now. If you pull up your daily chart, you can see a big gap closes at 145. Yep. That's personally what I'm targeting. We're actually probably looking to buy. I think I talked about this the other day here. We have a strategy where, we buy out of the money calls when things hit, especially with Tesla, a huge accumulation demand zone and or like a 220 would have been great to buy puts. But we're still not there yet. It was holding around, as it was holding around 150, gave way, came back. Pretty much, even Tesla's really choppy lately, right? Oh, okay, good. Yeah, good. Be careful though, because if we fill that gap at 145, that thing could rocket. As you know, last time we went down to 102, 103, and that thing rallied almost 110 points. So that's a lot of time for Tesla. Yep. You know what I mean? So you got to be very careful. In fact, if we break 145, I think we actually probably go test those lows along with the market, right? So it is one of the things that I did on my, I think I did, I don't know if you were in my class a 3 weeks ago, I did a correlation class. And one of the things that you always have to keep in mind, Jeff, is when you're trading any kind of individual stock, I have the 60-30-10 rule, right? Which is 60% of the move is going to be dictated by the broad markets, the NASDAQ or the S&P or whatever, 30 by the sector and only 10 by company specific. Unfortunately, most traders, most investors only focus on the 10%. And then, as you see, you can literally just put any stock against the S&P or the NASDAQ, and you can see how that works. So keep that in mind as well. Okay, Jeff? All right. Okay. So with that in mind, we just came up to 13,375 on the NASDAQ. I had a level, I think I've been talking to you guys about this. And again, these levels have just been, the level is 13,372.5 by 13,433 on the NASDAQ. You can see that's a base drop on an 8-hour chart. We missed that by, that level missed by like literally a couple of points, right? I think the high was, you can see it on the charts. Pull up your 8-hour chart on the NASDAQ futures and you can see that. The high was 13, what was that? Let's see here. Yeah, the high was 13,370 and a quarter. I had 13,372.50. You can see that. You can literally, if you guys, you should have your charts up when I'm in the session so you guys can see. Look at the NASDAQ futures. You'll see a drop-based drop. 13,372 is the 50 is the distal line, or the I'm sorry, the close-up line, and then 13,433. We came up, again, very close to that, and then we fell off pretty sharply. And now we have, some levels below around 12,800 is the first level, 12, let's call it 12,900, something right in there. Okay. So that's really coming into the Fed tomorrow and Apple earnings, and then the non-farm payrolls on Friday. So we've got a bunch of stuff still to get through. Okay. So we'll see what happens with that. And again, generally, just to kind of summarize, the index is all range trading still. And how you really tackle that is real simple. Is you're always going to get the best, and you saw that even in the last couple of leading into this week, where the top of the range, if you press that, that's where you're going to get the maximum, the highest probability trades. Now that we're kind of back in the middle part of the range, it's going to be a little bit more challenged, right? So until we get back down to the bottom part of the range, I would be very careful, maybe maybe position size lower and so forth. Okay. Now on the also very similarly, the I think I got it on Friday. Oh, you got it? No, that level's been out there forever, Jeff. Yeah, we've had that level out there literally. I mean, that thing's been out. Who knows? I always say market's always right, opinions are always wrong. I never have an opinion, to be honest, Jeff. You know what opinions get you, right? This is a family show. I'm not going to go there. You know what I mean? What happens if you get a strong opinion and the market proves you're wrong? There's an emotional trigger, right, Jeff? So I'm not one to have opinions. I just follow the charts. You know what I mean? Because if you get too dogmatic on what direction you think the market's going to go, then if the market proves you're wrong, then it makes you feel like a dummy, or makes you, you know what I mean, makes you. So I try to stay away from that, as you know. I write about that all the time. How's it been going for all those bears for the last 3-6 months, right, Jeff? You know what I'm saying? How are those bears doing right now? You know what I mean? So that's what I mean. You got to be pragmatic instead of dogmatic. Follow the charts. So the charts really are telling you that it's kind of sideways still, right? And by the way, this could break down or break up. I mean, I don't have any. Again, I don't have any opinion. I just let the market kind of dictate. I sell high and buy low. That, if anything, does that make sense, Jeff? Anyways, okay. So on the Dow, we've got 13,400 and just a mess. The Dow I don't typically trade the Dow anyway. It's only 30 stocks or whatever, but yeah, I mean, there's some levels down around 33K that look okay, but and then the small caps are just kind of tracking the banks. They're basically 1820 to 1700, pretty much. Very simple. One of the things I also talk about is, trading in its essence is actually simple, but it's extremely difficult, right? Simple, but extremely difficult. What makes it difficult is the human emotion part of this, right? The fear, greed, all that good stuff. Okay. So anyways, yeah, I mean, you can see it plain as day on the charts. 1825 down to 1700. Just like bonds. I mean, look at the bond market. Look at the 30-year. How clean is 129. Everybody, right? Look at a 8 daily chart of the 30-year. What's happened literally since March when it hits 129? I mean, it's almost like the algos know exactly where to go. Now the question becomes, where does it go from here? Is it going to break down 129? It's been there almost 5-6 times, so it is chipping away at that. If it comes right back down again, the top of the range, we're actually forming some resistance here at around 132 on the 30-year. Been focused on the TLT more or less. That also has pretty much 104 to like 109, very similar. Yep, exactly, JT. Yep. It is. It's again, it's simple, but so hard. Probably hardest thing anybody ever does. Right, JT. Pretty much. This is like the hardest thing. As I like to say, anybody tells you that this trading thing is easy. Anybody tells you anything like that, what do I say? Run for the hills, man. Right? Turn away and say thank you very much. If anybody tells you this is easy, yep, it's the hardest thing you're ever going to do, as you know. Some of you already know that. Anyways, right, 115, 116, really kind of choppy. 10-year, all the bond market has just been swinging back and forth, big whippy. Obviously there's some opportunities there. The only issue with the bond market is, these levels are like, $300, $400, $500 wide. If you trade some of these smaller levels, which I
typically never do, you're going to get whacked all over the place, right? So, as you know, I always stick to the big, 8-hour to probably weeklies are probably my big thing. Yep. Yeah, exactly, Jay. Exactly, right. All right. Dollar similarly, dollar is again, by the way, the dollar is tracking the bond market. As I told my members this morning, line up a rate chart against the dollar, and you can pretty much see the correlation. In other words, when rates go up, the dollar goes up. When rates go down, the dollar goes down. When that correlation is going to break, who knows? Even today, we had a huge bond rally. Rates came way down, and look at the dollar. It's got resistance at 102.32. It's got support at that 178. It's been just all over the place as well, similar to bonds. This also, in turn, if you take a look at the euro, similar mess, just back and forth. I think we were in that. We got out. British pound, similarly, all the currencies. Now we did, here's the thing. I think I mentioned this level to you guys on Friday, the yen, 73. We missed that by, again, gosh, it is what it is. But yeah, 73.01 was our level on the yen. And you can look at the charts. We also came close and missed that as well. So we've been kind of near missing a few trades here and there, but it is what it is, right? So we had a really nice pop. Remember, the yen is a safe haven currency. So you're wondering why the heck the yen rallied today? Well, the market sold off. So keep that in mind also. If you don't understand how the yen works, the yen sold off really hard because of the Bank of Japan last week. And today we had a big rally in the yen as a safe haven kind of currency. So if the market does sell off tomorrow for whatever reason, you can see the yen rallying all the way back up maybe to 75 on that. So unfortunately, we missed that trade, but we'll take a look again. We are trying to get long Canada around the 73. We also had we're also trying to get short pound above. Actually, now it's kind of getting away from us. About 127-ish on the pound. There's a nice short. And what else on the currencies? I think that pretty much sums it up. What we have going right now. The peso is probably headed back up to the big 55 level, which had a huge, that's a monthly level, actually hit right on the button, 55.82, and then just crashed down. And now it's kind of just been meandering, so nothing on the pace. So silver, we're trying to get long as well. And interestingly, gold looks like it wants to finally break out above 2028. So we are interested in looking to buy gold on a break as well. It's going to be a dollar play that could come in tomorrow. That looks like it wants to break to the upside. We've had some pretty decent trades in gold over the last several months, and now it's been chopping around just like the dollar, and looks like it had a nice run today as stocks sold off. So we'll see if that breaks up. Check out that 220. It's sitting right on the cusp of breaking out. 228. 2028, I'm sorry, 2028 is the breakout point. We're sitting right there. We closed right near the highs today of that breakout point. We'll see if tomorrow or, I think if the dollar breaks down, that's probably going to get us that push higher to gold. And then probably if it does break out, we probably go to 2100. So that's something I'm very interested in. Now, there's all kinds of ways you can play gold. Obviously, the futures are the cleanest with a micro or whatever. You also, we've been also trading NEM, Newmont Mining is another way to play these. You can trade GLD. Miners are actually pretty good, by the way. Look at Newmont NEM as a way to play gold. That tracks gold pretty well. So check that out. It's sitting around. We actually had a nice trade on that from 42 up to 49. Got up to 52, pulled back, and now it's also ready to break out as a way to play gold. If you want to do a longer term play, you can clearly see the breakout is around 49 on NEM. Okay, so we'll see. It's been range trading as well. The prior high was 52, as I just mentioned, and it looks like it wants to get up there again. And then if it does break, there's all kind of upside up to maybe 60 on this thing in NEM. That's a Newmont. So let's see. Finally, oil broke down today as well. I think we've been talking about oil. We also had some really nice trades. We actually got long UCO at 65, then the gap and all that. We actually left some money on the table. I'm looking to get long gold around the right below the 70 mark. So check that out. Today got hit really bad because of the weak economic numbers that came out with the jolts and all that kind of stuff. So, but down around 70, 65, I think it's going to be a great opportunity to get long gold again. It's basically just in a massive range. Nat gas can't get out of its way still, sitting around 222. We're still long oil, kind of just, we had kind of a little jolt of activity. If you remember on Friday, it looked like it was going to go, and it actually came right up to a level that I pointed to you guys before, 250, and then pulled back hard, and now we're right back up again. We had a little bit of a bounce here. We got 216 on nat gas. Grains, we were long corn this morning. We got out of corn, break even. I'm trying to get long wheat as well, and soybeans. So grains are where we're getting some nice movement in the grain markets. If other than today, it was been very choppy trading the indexes. So going into some of these other markets that are moving, such as the grain markets, are always moving and non-correlated. Kind of, the dollar is impacting a little bit of the currency the grain market. But we are coming into some really nice levels in wheat. Long term, just look at your monthly chart on that. I think that's going to be, if it works. Obviously, we never know if it's going to work, but if it works, I think we got some huge upside on wheat coming down at these levels here. So
Okay. All right, everybody. You guys have anything else? If not, again, I have a class tomorrow. If you are interested in spending some time with me, I will go through a bunch of charts, about an hour worth of charting. I'm going to go through the various odds enhancers that I use, various levels. If you are interested in signing up for that class, there's obviously still ample time. That's tomorrow, 4 Pacific, 7 Eastern. There's a link below. And other than that, tomorrow, obviously, great. There's going to be lots of volatility with the Fed, as it always is. Then you got Apple earnings Thursday and non-farm payrolls. So still a bunch of stuff, lots of volatility. Today was a little bit of a surprise, with the banking crisis and all that. So I'm glad the volatility is coming back, because it was getting a little bit challenged with, these. We had that kind of just choppy trading for the last 3 days. So anyways, all right, you guys have a great rest of your week. And I will see you on Friday. Okay. If you want to contact me, support@transparenttrading-solutions.com. And if not, have a great rest of your week. And I'll see you Friday afternoon. Okay. Take care, everybody.